A very warm good evening to all of you, and welcome to today's session of Motilal Oswal Presents Knowledge Series with Mr. Bond. And the topic for today is which is the true flexi cap. I think it's a quite catchy kind of topic which we'll be discussing today with Mr. Bond. And those who don't know who Mr. Bond is, I'll just uh, take a minute to introduce him because he is one of the person who is very close to, I think, most of the MFD fraternities and most of the AMCs because he is also known as Mr. Bond, Mr. Sunil Zaveri. He's a mentor, a coach, an author, and an advisor. So he's one of the most popular figure in terms when we talk to the MFDs because he had been there in the industry for a quite long period, trained about more than 80,000 of the people in terms of MFDs, wealth managers were across the board. And he had put in a lot of efforts to this industry to develop a lot of things in terms of SIP, SWP, and a lot more. In the past series, a month back when we had him, so we were discussing on one of the very important topic, which was based on SWP, the FAB way, so the fixed amount benefit way, what we talked about in the last series. So today, again, a very warm welcome, Sunil sir, to the board. And we have a lot of our friends who wish to listen you on this wonderful topic, uh, which is the true flexi cap. So I think I'll not take much of the time. People wish to hear you that what it is all about. And then we can follow after the session, we can have the Q&A session. Over to you, sir. Thank you.
Thank you. Thank you so much, Arpit. Good evening, everyone. This is Sunil Javeri, also known as Mr. Bond in the mutual fund industry. I'm in this line for the last 38 years and in the mutual fund space since 1995. What I'm going to discuss today is not, SEBI has done recategorization of different schemes called, some are called flexi cap, some are called multi cap, some are called large and mid cap, and so on and so forth. My intention is just to explain to the viewers, which is the mutual fund distribution community, as to there will be times when one category will do well, there will be times when the other category will do well. All I wish to do through this session, Arpit, is that please understand the different dynamics playing behind each one of these categories at different points in time. Flexi cap, the erstwhile flexi cap, which was the erstwhile multi cap, which was the flexi cap earlier. Most of the schemes are into that flexi cap schemes, that category, and the corpuses are so huge that they vary from almost 50,000 crores to 1 lakh crores also in each one of these schemes, and there will be some compulsions for that particular category. Then there will be a multi-cap category, which SEBI has introduced recently when they did the recategorization. What will be the implications of that segment at different points in time? And finally, the large and mid cap. So these are the three categories which we are going to touch upon through this presentation. So which is a true flexi cap? We are not going to say which is a true flexi cap. What we are going to try and do is figure out which category has its own issues and its own pros and cons at different points in time, how each one of them will behave, and then finally what should you be looking at when you are recommending this to your investors. Let's first and foremost understand each one of the categories first of all. So based on SEBI recategorization, the multi-cap scheme, the newly introduced multi-cap schemes, there should be minimum 25% in large cap, minimum 25% in mid cap, and minimum 25% in small caps. That is the category definition as per SEBI guidelines. The flexi cap, the erstwhile flexi cap, which is now the flexi cap in the current format, is 65% should be in large, mid, and small caps. That is at the discretion of the fund manager. And then finally, large and mid cap category, where minimum 35% should be in large cap and minimum 35% should be in mid cap. The rest is at the discretion of the fund manager. In the multi-cap category, that 25% balance, which is 25, 25, 25, and the 25% balance will be at the discretion of the fund manager, whether they wish to go overweight in large, mid, or small caps. So this is the SEBI recategorization, based on which the fund managers have to work around these guidelines and then invest accordingly. Now, what is large, mid, and small caps? Large cap is the top 100 companies which form the market capitalization of the top 100 companies. That's what is called large cap. 101st to the 250th company in terms of market capitalization are called mid caps, and the small caps will be 251st company and beyond will be all termed as small caps. The mid caps are the future large caps and more selection possibility, more fundamentally driven. All of us know that mid cap space is a little bigger space than the large cap, because large cap is 100 to 1 to 100. The mid cap space is 100 to 101 to 250. That means the mid cap space plus the large cap space constitutes almost 250 odd companies. They are fundamentally driven, and that today's mid caps can be the tomorrow's large caps also. And that's the reason why the possibility of earning better returns in this segment opens up dramatically. But having said that, small caps also will have its own benefits, because today's small caps can become tomorrow's mid caps, and then tomorrow's mid caps becomes day after tomorrow's large caps, and so on and so forth. But in the small cap space, as you know, after 251st company in terms of market capitalization, if there are 3,000 odd companies which are listed, you can imagine the number of stocks available in the small cap space. And this is where the fund manager's role comes in crucial. So if you are likely to invest only in the index in the small cap versus an actively managed small cap, naturally the actively managed small caps may do better, because many of these small cap companies may not have any earnings also. So they are more sentiment driven, and I will showcase to you as to how this segment is also susceptible to volatility, and that's the reason why small caps index is not recommended. The small caps in the fund manager, the active space is what is recommended. Now the way the debate is going on between whether you should invest in a passive fund or you should invest in an active fund, similarly there will be debates of whether multi-cap should be invested in, or flexi cap, or large and mid cap. So this debate will continue to grow day by day. Avoid the noise, understand the logic behind each one of these segments and categories, what can do well in which circumstances and which valuations is what is important for us to understand. So cut out all the noise. Now large cap valuations, if you see from October 2021, when it was at its peak, to currently on 30th of June 2023, practically large caps valuations are close to their 10-year historical average. The 10-year historical average, if the PE is at 24, large caps are almost at 22.5 to 23 now. After yesterday, it was actually 23.5. When L&T Mindtree got listed and HDFC got merged, all of a sudden there was a jump in the price to earning of Nifty by almost 6-7%. But in the mid cap space and the small cap space have still not recovered totally and fully from its October valuations in spite of the current rally. So there is still some juice left if the stock selections are done properly. But within those stocks also, in the small cap space, which I said in the beginning is limited in terms of the number of stocks which the fund manager will invest in, because they don't want to invest in each and every stock after 251st company. They are naturally going to be selective in which stock they wish to invest in based on the fundamentals of those companies and the growth prospects of those companies. The small cap space seems to be overheated at the current juncture. Looking at the past performance, all of a sudden there is a huge inflow and influx happening in the small cap and the mid cap space also. When I had posted this tweet, post SEBI recategorization, which category do you think is delivering best results? Flexi cap, multi cap, or large and mid cap? And surprisingly, the answers which came up, that multi-cap is the one which has done the best, that actually happens to be the fact as far as the current scenario is concerned, and I'll explain to you why also. So the whoever has polled for this are informed investors, informed mutual fund distributors who would have participated in this poll. And based on that, they had said that multi-cap should have done the best post SEBI recategorization, and it has done the best so far. Now look at the industry average. If you see the industry average from July 2022 to June 2023, the last 12-month industry average of the holdings in large, mid and small caps under each one of these categories, in the flexi cap space, almost 65% is held in the large cap space. Mid cap would be about 18% and small caps is about 11%. In the large and the mid cap space, 50% in large cap, 37% in mid cap, and small caps would be about 8% or so. This is the industry average. Naturally, each individual scheme will differ in terms of the percentages of large, mid, and small caps holdings. In the multi cap segment, 41%, 26%, and 26%. The rest is others, is debt and cash levels, etc. Now, if you notice here, the flexi cap has maximum weightage in the large cap space. You must understand why this is happening first of all. In the flexi cap scheme, as you know, most of the flexi cap schemes, the corpus is almost 50,000 crores to 1 lakh crores of each scheme put for individual AMCs. Naturally, when the corpuses are growing, they will have to be skewed more towards large cap. And that becomes a defensive way of investing also, and it becomes, when you have large sums of money to be invested, naturally it will be more skewed towards the large cap and then less in the mid and then the small cap. The large and mid cap, which has a per force 35% minimum in large cap and 35% in mid cap, is more balanced in terms of 51% or 50% in large cap and about 37% in mid cap. And in the multi cap space, as you know, 25 minimum in large, mid and small caps. Here in this case, the industry average is 41% in large, 26 and 26, almost practically to the level which they are allowed to invest in the mid and small caps is what they have invested. So this is what you need to understand as to when flexi caps become huge in terms of the corpuses, they will be more skewed towards large caps. So far, before the recategorization of schemes, so if you see the data of 60 months of large, mid and flexi cap, large and mid cap and multi cap, the returns were similar on a 5-year rolling basis, but naturally these categories may not be in existence, but this is the data which I have just collated just to explain to the viewers that, more or less, because the fund managers were running each category based on their own perception, whether they should be more in large cap, more in mid cap. There were no SEBI recategorization based on market caps prior to these dates. So that's the reason why practically flexi cap, large and mid cap and multi caps delivered similar returns during this period, plus or minus 1 or 2% here or there. But post SEBI recategorization, if you notice, all of a sudden multi caps have started doing well, and the reason behind that is very, very simple. The small caps, the segment where they have to perforce invest 25%, and you saw that the multi cap space has 26% in small caps, higher than the large and mid cap and higher than the flexi cap schemes category. Naturally, since these small caps have delivered better returns, here if you see the 24-month data, daily 24-month rolling returns from 2019-20 and 2021, if the multi caps have delivered 32% and 21%, large and mid caps have delivered 29.5 and 19.5, and naturally the flexi cap, which were more skewed in favor of the large caps, have delivered less returns than large and mid cap and multi cap. So what the poll showed was true in terms of why multi caps should have delivered better returns during this period post recategorization was the allocation to the small cap space, and that small cap space doing well, and naturally actively managed funds and actively selected stocks would have done even better than the small cap index. This is where we stand as we speak in terms of the performance of flexi cap, large and mid cap, and multi cap space. But if you see the rolling returns, which is the last 5 years, 10 years, or 15 years daily 5-year rolling returns, Nifty 50 15-year average return, 5-year rolling returns is almost 11%. As against that, the 15-year rolling returns of mid-cap space is 12.64%, and that of small caps is 9.27%. 10-year is about 11%, and 6.62% of small caps. And if you notice in the 5-year period, 12.55% of Nifty 50, the large cap space, the 14.6%, almost 15% in the mid cap space, and sub 9% in the small cap space. This is the data of the indices in each category and each segment over last 5 years, 10 years, and 15 years. If we were to do daily 5-year rolling returns for 5 years, 10 years, and 15 years, the average returns in each segment was this. So mid cap space has delivered the best results over any period, 5-year, 10-year, 15-year, and so on and so forth. But the maximum drawdowns have happened in the small cap space. If you were to do a daily 1-year rolling returns analysis of 15 years, 10 years, and 5 years again, minimum returns was 33%, 38%, and 48%, large cap, mid cap, and small caps. But maximum drawdowns, the number of percentages which had delivered negative returns in the small cap space was maximum of almost 44%, 39%, and 49%, or 50% in case of 5 years, 10 years, and 15 years rolling returns data. So small caps will have its spurts of outperformances, and they will have spurts of underperformances, but that underperformance will be very accentuated. There will be a lot of volatility attached to small cap space. So one has to be extremely careful that looking at the recent past performance, there will be a lot of money coming into the multi-cap space. This is unfortunately the way the industry performs, the way industry behaves. Based on the recent past performances, either the money goes into the small cap space, the mid cap space, or now the multi-cap space also. One has to be very, very conscious of the fact that going forward, if there is any correction, because valuations are not cheap anymore as far as India is concerned, naturally the possibility of more drawdowns with minimum 25% in small caps in the multi-cap space will be maximum. That volatility index, the standard deviation will be maximum in the small multi-cap space versus the flexi cap and the large and mid cap. Some of the AMCs have actually stopped subscriptions of small caps also. You must be aware of that 2 or 3 AMCs have stopped taking subscriptions in the small cap space because they find that small cap stocks, specific stocks, have become overvalued, overheated, and that's the reason why they are not taking any further funds into the small cap space, precursor to expected corrections in this market cap stocks. And fund managers find stocks held in small cap schemes to be distinctly expensive. Net inflows continue unabated, looking at the recent past performance, and all of us are aware that unfortunately in the small cap space also money is pouring in, the multi cap space also money will start pouring in, looking at the past performance. So finally, let me conclude it's a short presentation, but I just wanted to ensure that people are aware as to what are the differences and what are the circumstances under which each category will do well. Flexi cap is more defensive, skewed towards large caps, and that is precisely the reason behind that is the sheer size of these schemes also, and that's the reason why they'll be more skewed towards large cap. So whether you wish to be in a defensive play with more weightage and overweight in the large cap space, flexi cap is the place where you should be and your investors' money should be. Multi caps is skewed towards small caps with minimum 25% should be invested in small caps, and and that's the reason why it has done well in the recent past. So please be aware that, going forward, if at all there is any correction, nobody can gauge as to what, when and how it will happen. The volatility will start rising in the multi-cap space. Be cognizant of this fact and this data, and that's the reason why we are meeting today, to explain to you what are the different implications of different categories of the schemes. Likely to see more drawdowns when the tide turns against the small caps. Large and mid caps equally skewed in large and mid caps, with higher weightage to mid caps. Naturally, 35% minimum is to be invested in mid cap, and 35% minimum has to be invested in large cap. The industry average is 50% in large cap and almost 37% in mid cap, with better returns potential due to mid cap outperformance. I showcased to you that 5 years, 10 year and 15-year mid caps outperform the small caps and the large cap segment, with consistency also being part of that. So hence, based on circumstances, risk appetite of your investors, market valuations, different categories will perform differently. Intention was to make MFDs and investors aware of multiple categories. There is a lot of confusion. There will be a lot of debates which will be happening going forward, the way passive and active schemes debate is going on. Similarly, there will be debates on whether multi-cap is better or flexi cap is better or large and mid cap is better. Each one will have its own place in investors' portfolio at different points in time. When should you be recommending which category will be based on what I've just discussed with you. But having said that, all I can say is that the large and mid cap scheme of Motilal Oswal has done exceedingly well. If you see the last 1 year data, they are ranked number 1 out of 26 schemes. If you see the last 2 year data, they are ranked number 3 out of 26 schemes, and in the 3 year data also they are ranked number 5, I think, in the 26 schemes. So this is the recent point-to-point performances, which I generally don't like to showcase. But Motilal Oswal large and mid cap has delivered returns. I had taken interview of Aditya, the fund manager, also. He's given us the comfort, saying that he will continue to perform the way he's performing currently, with his own stock selections, the methodology, the processes which they have put in place. I had taken interview of Niket Shah, also the fund manager of mid cap scheme of Motilal Oswal, which is also doing exceedingly well. So that large and mid cap space, the selection of stocks will be very crucial for for the performances of the schemes. So that's what I wanted to highlight here. Please see the videos which are there on I Am Mr. Bond is my YouTube video channel, on which you can search for interview with both Aditya and Niket on mid cap and on the large and mid cap space. I'm available on I Am Mr. Bond, which is my Twitter handle, and this is my www.mrbond.in is my B2B platform for the mutual fund advisors.
So thank you so much, sir. It was a wonderful session from you again on the knowledge series by Motilal Oswal Asset Management Company. Thank you to all the participants for joining in. We'll be coming with one more series very soon with Mr. Bond on any new ideation, which I think he will be coming up very soon.
Or they can suggest, put it on the chat box. They can suggest.
Yeah, if anything you wish to hear on anything, any ideation, you can put it in the chat box. We'll take that feedback. And I think that could add much more value to all the distribution partners.
Thank you. Thank you so much.
Yeah. Thank you so much.
Have a great weekend.
Sir. Yeah. Have a great weekend. Thank you.
Bye-bye.
Yeah. Bye-bye.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.